morning, everyone. Um, Good morning. I'm posting this video today. I want us to make it short, so I don't want to waste most of our time here. So let's just dive into the video. This video I'm about to share now. It's a video everyone would like to watch and want to see. It's about trading. Most of us don't know what is called supply and demand. And what we all know supply and demand as to be, only when we see candle formation. Supply and demand can also be trend lines, you understand? It can be trend line, it can be a moving average in the trending market. So let me just dive straight to this point. The moving average setting I'm using here is a longer term moving average. Long term moving average, they are free from noise, they don't follow price, they are very strong and they react to price or price react to it very strong as if it's a trend line. Now these are the settings I'm going to be sharing with you for the moving average. It's only two moving average. I focus on price action mostly. So you tap the first moving average, 300 PM moving average, 2 pixel, you click done. Second moving average is 150 moving average, you click done. Simple moving average also. Now we go back to your chart. You slope your phone down. You slope your phone like this. You turn your phone. This is what it will look like. This trade is going to sell. I predicted sell already, and it's down. Now, as price is in this moving average, now right here, let me put the brush right here. Price is here right currently now. Understand? Price is here currently. Let me clean it. Say if this is a bigger time frame now, as price is at that particular moving average, I will just go down to 1 minute time frame. Understand? I will go down to 1 minute time frame to check what is happening there, if the price will continue falling or it will go up. So this is the 1 minute time frame. Look at what price is doing currently at that spot. Remember, here now is at the top of that moving average. Price is reacting to that moving average, so we'll look a candlestick formation that is happening there at the moment. The candlestick formation that is happening there at the moment. So now price is reacting to this 150 moving average. You are seeing what is happening there. You go down to 1 minute, you will see what is really happening there at the moment. You can zoom out, zoom in, then you will now confirm what will happen next, if the price will pass the moving average or not. But let me take us straight to what I wanted people to understand with this video. I've been back testing this thing for the past couple of days now, and it's working, and I would like us to be doing this with 1 hour time frame. Now whenever price hits a moving average, mostly all these bigger moving average like the 300, 200, 150, whenever price crosses the moving average from a trend, like let me show us an example here now. Example, look at this spot. Example, price crossed the 300 moving average followed by a bullish candle. That means this trend still remains bullish. You understand? Then at this spot now, whenever price crosses the moving average like this followed by a bullish candle, at this spot you can box out that zone. Like this with your tools. Then you head down to a smaller time frame. You can box out that zone because moving average also is a zone. You can't just see it because it's an ordinary line. You head down to your maybe 15 minutes time frame. Then you search that spot. As you search that spot, you will see what price is doing there immediately because that place is a strong zone. So you will now see what price is doing there. Alright. See what price gave us here. That was just like a fake out, you see. Price crossed it actually from that box, still followed by a bullish candle here. All these things are zone. They are all zone, you understand? It was just like a fake out. So price now went back straight up. Whenever there is a crossover of candle, whenever price crosses this moving average, followed by the opposite candle, that means that trend is still continuing in that direction. Same thing happened here in 15 minutes. Price was struggling to cross here. Price came here, it couldn't cross. Now price came to this spot, cross, followed by a bullish candle again. Understand? This moving average you are seeing here, this 300 and 150, they are very stronger than trend line. So once price react to it, follow it. Understand? Now let me head to 4 hours. Let's see if we can see such. Okay, look at it here again. I've been using this strategy to trade for a couple of days now. I will still show you some trade. Look at this spot. Let's zoom out our chart. Price came all the way to this 150 moving average. Struggled to cross it with the first candle, which is this one. We rejected it. Then finally, price crossed the moving average inside. Now, what matters in trading is where the price closed. Price closed inside. That means the bulls were in control. The bulls succeeded in carrying price to enter into the buy zone. Remember, whenever we are doing that with moving average, as price is below here now, we call this spot, all this place, we call it sell zone. Anything below here is our sell zone, like all these areas here. All these areas are our sell zone. Anything below here. Then above here, we call them buy zones. Buy zone. Understand? These are the buy zone. Below here is the sell zone. Understand? And it's very it's of good something to watch whenever price crosses a trend line or a powerful average. Price has tried to enter the buy zone. Understand? Now, if price crosses the buy zone followed by a bearish candle, that trend remains bearish. Understand? This should happen here. See, it is happening here. Now, this is a 4 hours time frame. As price entered the buy zone with one candle, we now box out that spot. Because this moving, it doesn't follow price. That's why I like it. It doesn't used to bend like other 20 moving average. Box out that particular zone. You mark it out like this. Because that place is also a trend line. It's not just a moving average, it's a strong trend line and a zone most traders respect. So we head to our 30 minutes time frame. Let's see what happened there. If we got another reaction from a moving average at the same time. Okay, let's go down to our 30 minutes time frame. Okay, see what happened here. We have a multiple rejections of that zone. Not only that, it tested that one once, but we have a multiple rejection at this zone. 1, 2, 3, 4. 4 rejections. And all those 4 rejections were giving us bearish signals. The first one was a bearish engulfing. The second one was a pin bar rejection. The third one was a tweezer top. Fourth one was a tweezer top also, and the price eventually went down. See, the price went down. You see, the price went down all the way. So let's go back to our 4 hours chart. Let me see another. So let me clean this one. Let's find another spot again. Okay, this one I've talked about that one. Let me also clean that one so that I will not get do a mistake. Alright. You see how price usually react to these zones, to all this moving average. It's very powerful. It's not a 20 moving average, it's not a 50, it's 200, 150 and 300. So price usually react. Now look at this spot. Price succeeded, the bear succeeded in taking price, in taking price into the sell zone. The price has been trading into the buy zone for period. Then the bears took price, close price below the sell zone. Now followed by a bullish candle that have the same opening as the closing of the former price. This is what we have to be paying attention to. This candle have the same opening as the same closing of that former red candle. Now, someone that wanted to buy from here, it's a forward. Remember, whenever this thing happens, the price must come up back. Now you buy from here, your TP at that 300 moving average, which is also a resistance, also reacting to. You see, someone that this distance or more. You know what this distance could have given you. Now let's go down to another spot here. This thing happened at least. If you are watching, you will see it. Even sometimes price will just came there, immediately give us a bearish river candle. Look at this candle here. It's not a tweezer top. And whenever there's a tweezer top, price will always come back to the last swing low. This spot in the hours. Like I've been trading this for how many days now? Since weeks. I discovered this moving average. Look at this spot. Price gave us a bullish engulfing here. Understand? Price gave us a bullish engulfing candle right at that moving averages. Now your tip around here, your stop loss below it. It's a nice fucking trade. You see, price react to these zones with it reacts to it. And now I've been coupling this thing with other block also, but I'm going to mention those one maybe in my next video. I'm going to tell you that one in my next video. See it here also. Price entered the sell zone, followed by a bullish candle having the same opening as the low of that one, tapping at least 50%. That means this zone, the bulls are not letting price to go even below this zone. Enter your buy position here. Buy your TP at the next key level. Understand? Very, very nice trade. At least once you can buy from these spots. Okay. Alright, so if you're new to this channel, you can just do us a favor by subscribing, clicking the like button. I will still be bringing more videos. You can just add this two moving average to your chart and watch how they react. Also, I do trade them with other block and imbalance, but I will give you a video next week about those ones.